Welcome to another episode of Economic Lifelines Nigeria, the program that takes you through how the authorities in Nigeria are providing a lifeline to key sectors of the economy. Today we reach you from the facilities of MRS. This NSE-listed company is one of several that imports refined products into Nigeria. Indeed, the tank farm you find behind me actually stores 17 tanks that in 2011 stored $2 billion worth of refined petroleum products, a huge number by any standard. On our show today, we take you through the highs and lows of this key strategic sector in Nigeria's economy and talk you through how the Asset Management Corporation of Nigeria has provided a lifeline that many feel still needs to be extended to keep this very important industry in business. For those watching, Nigeria's oil sector presents a shocking paradox. Observers are amazed that one of the world's top producers of crude oil and a country that has exported oil for over 5 decades spends billions of dollars each year importing refined petroleum products. The state of affairs reflects decades of government regulation of fuel prices that has discouraged the private sector from investing in Nigeria's downstream oil sector. But the growing energy demands of a $250 billion economy, expanding at an average rate of 7% over the last 10 years, has put tremendous pressure on local refining capacity. A combination of corruption and the failure of poorly maintained government-owned oil refineries means that Nigeria is unable to produce enough diesel, petrol, kerosene, and other petroleum products to energize sub-Saharan Africa's second largest economy. As a result, the difference between what is supplied from local refineries and what is needed in the country is imported. The growing demand over the last few years has meant that more and more liters of petroleum products have been imported by Nigerian entrepreneurs.
If you begin to regulate and then put a lot of subsidy in any deal, what you see is that there's a lot of loophole and it becomes an all-commerce thing because it's like people taking a share of the national cake. Everybody that was somebody had an oil and gas business. Okay, I mean, if you are talking about an import of one cargo, you are talking about something in the neighborhood of $15 million. That's a lot of money, a lot of cash. And many times in a quarter, you have several cargoes coming in. And what even became interesting, we started to do what we call the crude swaps, wherein you pick up crude and deliver refined products in exchange. It was big business. People talked about billions and billions. It was an all-commerce affair, and therefore you had both skilled and unskilled traders in the game. And where you have all of that, there's always heightened risk because you have people who do not know how to trade. They basically understand how to buy and sell, but when you are dealing with a high-value, low-margin item like that in an environment where there are all kinds of exposure, that's in foreign exchange fluctuations, crude oil prices fluctuations, and you need to use complex derivatives to hedge your bets in the market, you find out that the average marketer begins to fail when things change internationally.
Change came in the wake of the global economic and financial crisis in 2008. The sharp crash in crude oil prices that followed, and the equally sharp depreciation of the naira in early 2009 meant that many petroleum product importers who borrowed huge loans to finance trades were caught on the wrong side of the declines and had to swallow huge losses.
The price of crude started crashing. Meanwhile, they had made orders based on high prices. So by the time the products came, the prices had already crashed and it was being sold much lower.
Seyu Dantata is the CEO of one of the largest petroleum products importers in Nigeria.
At the time, I think 105, 115, and down to $35. I mean, you're talking about 70% or 80% reduction. I mean, crash, in the price. And you have people that have cargoes outside because once you arrive, you more or less lock in the price. But there's very few of the local companies that actually know the international know-how to be able to hedge themselves. So obviously, that is a problem.
So they suffered a lot because of that. Secondly, there was also a coincidence in the sense that the naira was devalued at that time. I think from about 118 naira to to about 140 naira. So that compounded the issues because many of them were borrowing in dollars from the banks. So regardless of the exchange rate, although they will sell their products in naira, they will have to buy the dollar and pay the dollar loans. So really, these are the two major reasons that compounded their inability to pay their loans, and their loans were not performing by 2009.
The sharp change in the business environment resulted in many of the petroleum products importers ending up at the Asset Management Corporation of Nigeria, Nigeria's bad bank designed to buy problematic loans from Nigerian banks and stabilize the sector. However, the problems of the petroleum products importers were compounded over the last year after the latest attempts to end controversial fuel subsidies in January 2012. These attempts were met by widespread protest and a 2-week national strike. Trade unions and other protesters argue that the government cannot be trusted to spend any gains from the removal of the subsidies responsibly. The corruption around the disbursement of the subsidies justified their fears. Several probes into the handling of the fuel subsidies have led to the indictment of several players. However, while the probes are good for the sector over the longer term, the verification of the subsidy claims meant that many were not paid the subsidies for several months. And because many planned to use the subsidy payments to pay back bank loans, the industry suffered under the pressure of the high interest payments linked to bank loans.
Truly, honestly, the subsidy has been something that has been talked about for the last 3 regimes. Obasanjo talked about it, late Eradwell talked about it, and obviously the current government have talked about that. And when you give the marketers hope that it's something that will eventually take place, of course, being a businessman, people will go out and take chances, hoping that it will become a reality. And when you all of a sudden you keep shifting the goalpost, what happened is you keep making a forecast that is not becoming reality by promises that the government have made. So, of course, that will deepen you even further. And then you wake up one night, you realize that there are some malpractices out there being perpetrated by other, I would say, tout of the industry. So you find yourself in a dilemma. Here you are, a major player in the industry, but obviously you don't have control. You don't know what will change tomorrow. In the 2011, where government decided that they were not going to pay anybody until they have taken account of which is good. But in life, you know, they said every situation, they say, oh, we could have done it this way, or should have been done this way. But of course, it also put more strain in the oil companies. Because here you are, you stop working, but yet you have to continue to pay the overhead. Downsizing workers, it is not solving any problem, because how much does already workers earn? But when you leave equipment not being used for a long time, to come back and reuse them, it also costs money. And then you still have bank that the interest continue to accrue. Meanwhile, you're not working, but the money you have borrowed and you have spent the money. So it is what you call maybe double jeopardy, that they call it in this years. That's where the oil companies found themselves. Only the stronger ones actually can still get up and say something. But even them, because when you're big, the wound is bigger. And by the time they finish the exercise of the subsidy, even those that are clean, it took another 3 to 4 months for them to get paid.
The entire investigation process slowed down the industry in ways that I'm not sure were favorable. Okay, I felt, okay, that we should quickly wrap up all of those things and let the industry have a lease of life and begin to do business again as usual. And when I say as usual, I don't mean as corrupt usual. I mean professional, well thought out businesses should be allowed to just thrive. All of these delays, I mean, there are people that borrowed money. At the end of the day, some of them are being exonerated, but they are dead on arrival because they've spent a lot of time trying to resolve a lot of these issues and trying to explain their position. And their loans are running with interest piling up in the bank.
The downstream oil and gas sector in Nigeria is obviously facing big problems that threaten to not only bring down the industry that provides a significant chunk of the energy used to power the industries in Nigeria, but also threaten the broader banking sector. The Asset Management Corporation of Nigeria has played a significant role in relieving the banks of the burdens of problematic loans and is now focused on the tough task of engaging the debtors to recover loans in a way that will not destabilize the economy.
Our overriding objective is to recover the monies that are being owed to AMCON, the monies we put out for the debts. That's our overriding objective. But very, very important in conjunction with this is that we're very interested in employment. We think that employment is a challenge for Nigeria, and we don't want to do anything that will interfere with continuing employment where possible. So we want to get our money back, and once we can see our way to getting our money back, we want to keep the business intact, support employment, and support the economy that way. So with the same thing, whether it's downstream, whether it's aviation, whether it's upstream, we approach all debtors the same way. Can you pay us back? Are you willing to pay us back? Once we can see our way to yes for those two questions, then we're willing to work with you to support your business, to maintain your business, because we think that employment is a very critical thing in this country.
Yes, the first thing we do is that when we engage them, we ask them to prove that they had business challenges, that it is not a case of mismanagement or diversion of the banks, of the loans they took. So the first step is that they must bring audited accounts certified by their auditors. The auditors' accounts will show clearly how the losses came about, and if we are satisfied, then of course, because of the engagement we did when we were buying the loans from the banks, already the banks have taken a big haircut on many of these loans. So that means if it can be established that it's really a business loss, a business challenge, we can pass on some of the discounts to them. Secondly, we are also able, because of the long-term nature of our funds, we can give them, based on established or clear assumptions of cash flows, we can give them a long tenors, which the banks were not able to give to them. So as of today, we have restructured many of such downstream operators' loans in our books, but their challenge still remains funding, access to funding, because of course for them to come out from the woods, they will need additional funding to trade. And that is a challenge they are having with the banks because of the history of their records with the banks has not been too good, and the banks are not quite comfortable to grant additional loans to them.
After the break, we take you further into how AMCON plans to recover loans from a sector that is largely unable to access fresh credit to trade out of a crisis, and examine what more can be done to keep these oil trading businesses alive.